Call the workshop to order. Tonight, we're meeting a workshop to review the preliminary budget and capital improvement plan information. We've got Tessa here from Abdo, our acting financial director, and I think she's got some things for us to work through tonight. Tessa.
Good evening, thank you. So I believe you all have a paper copy in front of you that you've received as well. I'm not gonna go through and read the full document beginning to end. I know it's a lot of information, but I wanted you to be able to have all of that to see how it's been compiled. And then with discussion, I'm kind of looking for, I'll go over it, but more of a fluid conversation where I can get a better idea of the council's goals and what you would like to incorporate next year. This is the first draft. By no means is this anything that is set in stone. It's just gathering the data that we had and using some assumptions to have a starting point. And then from now, we can revise it and refine prior to coming back in November. So there will still be another opportunity prior to your adoption of the final budget in December. So we can take the feedback from tonight, update it, bring that back, we can give you another opportunity to look at it and see if that's what you were thinking, and then we'll have the final. So hopefully by the time we come in December and do the truth and taxation hearing, it'll be kind of a rubber stamp because you'll have seen it and you hopefully at that point are feeling comfortable in that. So with the budget, there's so many interconnected pieces. You know, your levy is tied to what decisions you make on operating costs. That can be also related to what projects you have going through your capital. So there's a lot of moving pieces that all sort of impact each other. So I'll sort of start with an overview, and then we can dive into some of those conversation points and go through those. So the document before you this evening is the city's governmental funds. So this does not include the enterprise funds. Those will be brought the next time we come. So the biggest focus is your general funds, but there's also some debt service funds and special revenue funds and capital project funds as well that we'll look at. So for each of these, we provided the actual values for 2022, the actual values for 2023, and those are your audited financial statements. Your year-to-date numbers through September 30th. A note on those, we're still refining some analytical review and going through some payroll review. So there may be changes as far as coding between department accounts or maybe some reallocation, but it's a pretty good idea where it's at. We then took through September 30th and projected that out through the end of the year. I'm not guaranteeing those numbers, it's just the best guess, kind of looking at where it's been and allocating out the rest of the year. Also for your review then is the 2024 budget numbers to have comparison, and then finally our 2025 with the changes from the prior year. So for 2025, the general fund has a total budgeted revenue of $3,092,441. Looking at that compared to the prior year, it's a decrease of about $30,497. Your intergovernmental aid budget went down about $220,000, but that's offset by the increase in the property tax levy. The intergovernmental aid is relating to a one-time aid that was budgeted for that public safety aid. One question I had on that was received in December of 23, and that's shown as a restricted fund balance. Has that been allocated to be spent yet or designated for a certain purpose, or is that still set aside for that?
Talking about the state aid funding, right?
Yes.
Have we dedicated that to? I thought we dedicated it to go to our public safety bill. That was my recollection of it. I can't say if it physically happened
Then we'll just make sure we classify
Yeah.
that correctly.
I don't think there's have any other way we could use it other than pay for our law enforcement anyways.
So the projected revenues for 2024 are $2,877,925. That's about 243,000 less than what was budgeted. Again, that's primarily relating to that intergovernmental aid that was budgeted in 2024 that received in prior years. One thing that we are changing as well, relating to revenues in the 2025 budget, in the prior years, the interest was all budgeted for in the general fund. This is now being allocated out to the various funds based on their cash balances, so. You'll see the decrease in the interest budget for that. On the expenditure side, in 2025. I'm gonna take over there. The city had a total budgeted expenditures of $3,092,441 again, so it's a balanced budget. In 2024, we're looking to have a variance in the budget of $327,239. So looking at spending less than what had been budgeted. A couple of reasons for that. There was a full-time public works position that was budgeted in 2024 that hadn't been filled. Between the wages and associated benefits, taxes included in that, that was roughly $95,000. Public works maintenance costs were under budget by about $219,000. Beginning of the year had a very mild winter, crossing my fingers, the end of the year will be the same. So, but that's a really tough one to know, to get
Get your
on.
farmer's almanac out.
There are also some professional services and capital projects for 2024 that didn't happen, as well as vacancies and staff positions. And some of those vacancies, you'll see a decrease in the wages and benefits. Some of that is offset by contracted services for filling those roles, but. So in looking at the 2025 budget, some of the assumptions we used, we budgeted the wages with a 3% cost of living adjustment. For the city administrator position, we budgeted that through wages, benefits, and taxes for half the year. And then we budgeted an interim city administrator for half a year. As I mentioned, there was a public works employee that had been in the 2024 budget. For now, we did include that in the 2025 budget. That's, as we talked last time, that'll be a decision point if that's something the city would like to keep in that. There are a number of positions that are vacant and haven't been filled, or with new employees starting that we weren't quite sure. So for insurance expenses, we budgeted those premiums for a city clerk, half the year for a city administrator, a finance director, the planner, and a potential public works employee, including those expenses in this budget. In that way, they are there if the employees elect that. We went through and looked at the 2024 budget and expenses and tried to find the projects that the city had planned on that had not happened, so that those costs were not included again in the 2025 budget to double up on those. Another thing, election costs were pretty minimal. There was a small amount for supplies in case there were items, but with no elections in 2025, those costs are minor. And then for public works, for the maintenance, there's some discussion items relating on those to go through. So the budget for 2025 compared to 2024 had an increase of about $76,834, or about 2.6%. So next we'll touch on the city's fund balance. We kind of showed you what costs are estimated to be paid next year. Some of the funding sources for those.
Can you go back for a second?
Yeah.
The 7.6% is what? That's general fund expenditures.
2.6%, increase. from the-
$76,000.
So, and that's 2025 versus 2024? What is that?
Yes, 2025 total expenditures are $3,092,441.
Okay,
And then
versus-
the budget for 20.
okay, but versus 2024 estimate, because that's really the number you want to look at, right? That's what I didn't understand.
Oh,
Sorry,
sorry, yes,
our-
these were the changes from the 2024 budget to the 20.
Right, so really our expenditures are going up 404,000 or 15%. Versus 2024 estimate. That's what I'm looking at. Cause who cares about the budget if the budget isn't accurate? Rather look at that, what we think we're gonna end up being, right? So when do you want us to ask questions? You wanna go through all of this first? Okay.
If you'd like, anytime, if you wanna go through some of the individual items, if you have questions, or we can go through those.
I think we'd be better off asking questions as we go through, otherwise you're gonna flip
Be
back.
hard to-
Right, yeah,
Yeah,
Remember, if you do look in appendix A and B, it has the detail of, the city's line items for each of these.
Mhm.
You can see what's all included and some of the notes that go through on how the projections were done or any budget question.
okay, thank you.
For revenue, did anybody have any questions relating to any of those items?
did you look at my comments that I sent to you? Do you want me to address them in front of the council?
Yes.
Okay. I'm gonna hold off on my first one because we're gonna talk about reserves later. So I'll hold off on that one. You might want to consider adding 5,000 to the permit state surcharge. The account is 32211 because we've averaged about 6 grand, 5.7 grand over the last 3 years. And the budget has nothing in that. So I don't know if we're not getting anything, but the next thing was interest earnings. You have I think you have it flat in the general fund. And aren't interest rates dropping? So I would make an assumption that we're gonna have something less than what we had this year. But I don't know how you would want to estimate that. Maybe your firm knows. Or you just take a look at it. My number was 30 grand. Of less earnings because interest rates are dropping. But that's my estimate. And then this is a nit, but there's $649 that you're using for out of general fund revenue. Or you're calling it revenue. It's from the general fund reserve. If you take it out of reserve, I don't see it being taken out of the balance. You're adding it to revenue, but you're not taking it out of the balance on the bottom of your sheet. So you either need to take it out of the top or you need to account for it in the bottom, if that makes any sense. But that was $649 and that's not gonna break the budget. All right, but it didn't balance. That was all the comments I have on revenue, general fund revenue. Outside of the excess reserve that we have.
So that state surcharge, it looks like there has not been anything in the budget again in 2024. A lot of times with those, it's sort of an in and an out, a lot of that's then paid back to the state, but I will look into that a little bit further and we can include something in there. I'm seeing it showing a pretty big increase compared to last year, but again, that could be some coding changes that may need to happen.
Right,
But I'll take a look at that.
okay,
Because if we look at 2023, there was only about 475, usually that
right.
somewhat washes out, it's what's collected with those building permits and then it's paid back. So I'll have to look at some of those balance sheet accounts to see if it was possibly not.
Yeah, my 5,700 were just an average of those of 2022, 2023 and 2024 projected.
Yeah. My concern is that the 2024 numbers may need to be revised, but that is something we will look into and definitely update for the next.
Right.
we look at the expenditures, there were some variances I found with wages and salaries. So for the mayor and council, we estimated with the salaries that were approved, with the last resolution that had been passed that we saw, and estimated with 24 meetings a year. Yeah,
And we don't get paid for liaisons or any of that stuff, right? So that's an accurate estimate. We don't get paid outside of those 24 meetings a year.
No, it's in there. You get paid for liaison.
So my point is that you're not she's underestimating the budget then. So my suggestion is you look at this year and use the same number. Or just 9 months times or prorated for 12 months. That would be my suggestion.
Yeah, it is almost, the projected is almost on spot with what the budget is.
so should we leave that budget at,
40.
about that 40,000?
Looks like that's what we're gonna track to this year.
Did you pull out did you normalize for the separation of the former city administrator, all those costs? You pulled those things out. Is that why some of the numbers look goofy? Like FICA, for example, is way high.
Yeah.
Okay,
So, and asked Eric about that, like.
Yeah. yeah, okay,
But September's, I questioned what that was, because I didn't wanna.
Yeah.
When you had that larger amount,
Right.
project that out even more, so I took out the payment.
yep,
And then
and all the benefit or all the taxes.
projected out and then added it back in. So,
Yep. Great, thanks.
So where's the contractor expense then so we got half the year for the city administrator, where's the corresponding?
That is under, it's under the administration and finance, and then if you go to contracted services, it's 100-4132. 320-300. So. The 2024 budget was for a strategic plan, but that didn't happen. The cost for 2024 were for the interim administrator contract. So then for 2025, we budgeted for 6 months. So that line item is showing a pretty significant increase from the prior year, just because that hadn't been something that was included last year. And then as well in there, we had some software that had been budgeted in 2024 that had not been spent. So there's a pretty large decrease in those budgeted expenditures. There was also some cost for ordinance codification. So those will come in later. Looking at some of those and possibly transfer those out, but.
So do we have any recruiting fees for the city administrator we're in our counter? So that was I thought a pretty significant,
It was 25,000,
and we missed our,
probably missed the window.
No,
No? No?
so, I've been communicating with Liza Donbauer.
Yeah.
I remember her.
Yep.
I started talking with her back in August.
So like
something
a month,
that.
2, yeah.
And so checked in with her last week. And she expects to have a proposal to me, and I'll forward it to you folks, obviously, hopefully by the end of this week. The number was about 22,000 last time. However, you have a 2-year
Hmm.
grace period or two. and
Not
I had
2, I
that-
thought it was 1,
Yep,
yeah.
no,
2,
it's
good.
2 years. And so I would expect that they might have out of pocket costs they pass
Right.
on, but. It should be significantly less than.
Yeah.
Those were not included, so that probably will be something
Mhm.
worthwhile, so, or 22,000,
No, that
No.
shouldn't be that high.
Oh,
No,
okay.
no, no.
No. My knee jerk guess, 5.
Okay. What about for, like the finance director position? Do you plan on using a recruiter for that? Should we include any costs or?
That's probably, I mean,
I didn't hear something.
I said
This
that's
is
probably a
need.
need. That's probably a need.
So,
Oh, but
yeah, I mean, you could, I did ask. Interestingly. I think it'd be harder to recruit for a finance director in some sense
yeah,
than city administrator kind of, sometimes, it just depends.
Hmm.
I asked if they'd be willing to swap
Oh.
too. They said no. Anyway, I think you might be able to take a stab at doing your finance director in-house. I think, got some good people here that can review those things and take a shot at it. I do have a complete profile ready to go and hit send to the various parties. What I've maybe been a little bit hesitant to bring it, back to you folks is you get through an election and those are the people who should be engaged in that analysis. You could probably start the process, depending, after mid-November, it's all gonna be kind of generic. But once you get into the reviews, you want those people who are sitting in these seats to be doing that engagement.
okay.
Don't offer, you don't have to, but it's probably most fair to you folks and most fair to the candidate.
By the way, I just noticed Eric and Tessa, would you turn on your microphones? Because there are people watching. Thank you.
So I think you can do the finance person, at least take a shot at it.
So should we budget anything for that then?
I don't think you need to for the finance person, not yet. I don't think so.
Okay.
I mean, if you have out of town people that you're flying in or you're hoteling in, I don't see them doing that.
Yeah, I don't see that being
You might get that for a city administrator type person, but I still think that might be a stretch.
Background
Yeah.
checks? things
Yeah,
like that?
some of that, but should be minor.
So really not something to worry about.
I wouldn't worry about it.
So we'll add 5,000 then for city administrator recruitment fees.
Yeah.
On the finance director note, we did budget that for the full year. Is that consistent with your timeline, what you're thinking, or do you want to allocate that out similar to how we did with the administrator? Leave that.
Well, how are we treating paying Advil for the,
This is contract.
So that's
This
in
is
contract.
so is that also included in that, or do we just kind of,
included in the budget for the full year of the wages.
yeah,
No,
or
you-
combined, combined, I'm just looking at.
Yeah,
No,
You need to figure out kind of an approximation when you expect to have a finance director on, so you can then cut over the wages from the contracted services.
So
Okay.
I'm sorry.
no, go ahead.
Your finance director type person, so. If you started in earnest mid-November, I think best case scenario, you could have somebody on board March 1.
Yeah.
Between trying to recruit them for a period of weeks. Meeting with them for a period of weeks, they're gonna have a separation timeline from their current employer, so. The holidays are in there. And best case could be March 1st, I think. Could find yourself a unicorn and they're willing to start tomorrow, so to speak. But
Going to Public Works, would you like to have the discussion regarding the Public Works employee? As I mentioned, that is something that was included in this budget for your review to see how that would impact the total. That is included in the 100-43000-100. You'll see an increase. Some of these are coding we allocated based upon where the coding was in 2023 and kind of anticipating where we think it'll be with some new positions. So some of these may have which slightly over departments. For example, Public Works is a big one that does that because sometimes wages are coded to snow and ice, sometimes to park maintenance, and that's really dependent upon weather. But overall, it comes out of the general fund.
One other, so in the notes. For Public Works, depending on that. Division of labor, if you hire somebody. Maybe you're billing a portion of that back to your CSTS as well, for good or for bad. You know, they're gonna, it's gonna depend on the nature of the person you hire and what you want them to do. If they're kind of a supervisory-ish type person and executing a contract manager versus what the term is, a laborer type person. That could be harder to define.
So we just hired our snow plowing for pretty much all of our stuff, all of our winter work. We just contracted for that. So at this point, you know, kind of looking at it, we don't really have any needs, or do we, until March? Or at some point, you know, as you recall, last year, we kind of got into this thing where our former administrator wanted to hire people, but we don't, at the same time, we were also contracting for all the summer services. So there wasn't a need for it. I guess, you know, my question is, how do we treat that? Do we just look at trying to budget for the start of a budget in the spring quarter? And work on them reducing some of the costs for the summer work, so that we can, you know, basically self-perform that in order to pay for that, or, you know, how do we want to treat that? I don't think we want both.
No, you don't need both at the same
Right.
time, because you're right, we've got Mark's Bobcat to do the parking lot of the
Right.
DSTS
And
roads.
we just did Gallagher for all of it.
Yeah, we wouldn't be ready for that anyways.
Oh.
Not anywhere as close to that one. But
I mean,
that could be a potential, I mean, if you looked at it in the spring as a startup, then.
well, the question is too, is like, are we, what level of person are we hiring? Are we hiring somebody to administrate it, or are we hiring somebody to do work? You know, so.
Right,
I don't know if we need both, or maybe we do. I think we just have to have that discussion.
My 2 cents of it.
Yeah, we'd like to hear it.
Is. Hey, maybe globally, this is $78,000 figure for public works personnel. You know, I think if you were able to probably give that a haircut, because you probably wouldn't have somebody on board January 1. I think that's a given. However, if you arch towards the start of the second quarter, maybe. You have a better conversation about, what do you want that person to do? What's that person's real role? That person has got to have some real engagement with your CSTS more than you might think. The contract, for example, in the snow plowing, asks for some poor soul to be the contact with Gallagher's. Should there be an issue? Well, it says city administrator or their assigns. Well, who should that be?
Yeah.
But you're starting to build trails. You're starting to do some of these other things.
Right.
You know, so in my 2 cents of it is just have somebody who's capable of doing some of the out in the field things. But at the end of the day, they should be a capable contract manager, a capable somebody who can coordinate work with all of your consultants, work with Shane. We get complaints about grass cutting at the CSTSs. Well, who's got their finger on NSU on a daily basis? You know, they should have pulse of your systems in a way. But I think you should talk about that early next year. But I think you cut it now and aim for the second quarter. It's a concept. Or do you just hire a laborer type person? If you do, well, you have no equipment
Or place to put it.
or a place to put it.
So back to that point, our previous administrator severed all ties with the connections we had with this. Brent was in charge of the CSTSs and I was in charge of different things and it all kind of worked. And then she became in charge of everything and wanted to get public works people in here so she could run it. And I was not in favor of that.
I don't think you need more than one, to be honest.
Yeah.
You know, with some mixed skill,
You
Anyhow,
don't need to go from 0 to 100.
no,
You don't need a staff of 4 people to do this stuff.
no,
no,
could even get maybe a part-time guy in the summer, I don't know.
so what are we looking at having the budget? I mean, what's the amount?
So now take that from a full year and allocate that for
Recorded.
3/4 of a year,
Yeah.
okay?
So if it's roughly
Mhm.
80, it's a little less than that, knock it down to 60.
And I heard you had a contract for snow plowing that was approved, is that correct? So if we would have a public works employee, let's say for April 1st start, roughly, does that impact what you would budget for your snow plowing or grass mowing or any of that?
A
Okay,
lot of new shovel back there.
okay, well,
Shovel team.
some good exercise.
Well, it would impact
Hold on
our-
a second,
Yeah.
hold on it.
Well, yeah, that's, well, for shoveling here at City Hall,
We
we
just
still
talked
don't have a way
Hard to
to.
do things, but
Put the sidewalks and stuff.
Oh, we had like
But we still don't
90,000
have a-
savings.
We don't have a,
Last
we have
year's
a
budget,
truck
and
now,
we were hired.
yeah.
I mean, it's got a blade,
so.
we got a blade on it, yeah, incredible.
so I would think we'd wanna use that person to plow here at least.
Well, it'll probably have more effect in November, December next year.
Yeah.
Right.
So those.
Yeah, not this year, no.
But
That's
for
what-
next
no,
year,
no.
when that public
Next
works
year,
employee
correct.
potentially is
Yeah.
in there, do we want
Then
to
you-
reduce anything on that snow plowing contract budget, or for now,
That comes
just
around.
kind of leave it as it's planned for 2025, and then as you can see what the impact is on if they're doing different areas? I don't know. It's hard to really have a full idea, but
That one position. 78.5. I think if you just knocked it down and
just take
knocked
3/4
it
of that.
down to 8, knocked everything
Mhm.
down 8 by 20%, 60. Probably get you where you
Okay,
kind of need to be. I
65.
mean. Some number.
so in looking at the budget with maintenance for plowing roads, there was 132,000 that was in the budget. I'm not,
We've never been that high.
that's what I was
The
gonna
the average
ask.
over the
It's
last 3
been
years
a
has been
lot
about
less.
$100,000 for plowing,
Okay,
and that includes salt.
We have. been
No, that, I'm
hired-
sorry, that takes exclude. I think that excludes salt.
We have been hired in that bill.
When I went and looked at the last 3 years of claims, Payne, Gallagher's.
Talking before that. I mean, previous.
Oh,
Yeah,
you're
the
talking,
last-
okay, I
We've
only
had
went
no
back,
snow the last
Yeah.
3
I only
years.
went back 3 years.
Yeah, we got no snow the last.
Well,
3
2 years
years.
ago, we had a huge
One done, but,
one.
but that's not the same. as-
You're doing your best.
I just think it's high.
Also, are we budgeting for the grader to run the gravel roads? Is that in the snow or is that somewhere
No,
else?
that's somewhere else.
Okay.
Usually it's somewhere else.
Yeah, so the Gallagher's contract is different than, does not include
It
that.
doesn't include any
Because
of
we-
the snowplow removal in the gravel roads.
You do that yourself.
Cause
Yeah,
we pay, yeah, we pay for the equipment, we own the equipment and we hire the part-time driver
Right.
for that.
So that's, but budget wise for snowplow removal or snow removal. Is that taken care of in the grader or is that,
Don't know.
that's my question.
Cause it depends on where those expenses were coded. Wages and services probably, huh? And
Under 43125-100 maybe.
general,
Blade roads. Plow roads.
personnel up in the top up there,
Yeah.
would that be the one
here.
that's
yeah,
projected to be 9824 for this year?
I think we had it under wages, salaries, general.
Right, the 100 that you mentioned?
Yeah. You have to go back and look at where, what those expenses, what they were coded to,
Mhm.
we could find out,
And that was for grading, you said?
yeah.
Grader operator.
Figure out.
Okay,
So
yes, I think that
Cause
is.
they're the only employee the city had.
Yes. For public works,
Right.
yes.
And that will be maintained,
Yes.
sure, okay. So it doesn't look like there is anything in those budgets, so we will need to check that and confirm that, so we'll take a portion out for that other public works employee. But some of that looks like it may need to be just reallocated for that grader. I think that position may have been excluded.
Pretty well.
So what's, can you give me the summarization of what we're doing with public works? We're hiring them on April or her on April 1st. So that'll be a 3-month reduction in salary and benefits.
Mhm.
And what are we doing on, we're not gonna incur all the operating expense anymore with third parties, because we're gonna have this person do something, right? Or aren't they doing any? So is that your 20% cut?
Yeah.
Cut the, cut in 20%?
My
Cut
thought on
something.
it was. Like, you're-
I'm just trying to get a ballpark. Is
Yeah,
it
yeah,
20% of?
20, to me, if it's. On that first line, you got 78.5 and the related para FICA and those things,
Yeah,
I think if you just. Took 20% off the top of all those numbers,
okay,
it would just be a rough
that's
guess.
good.
I'm sorry.
Yeah, 'cause we have some,
20%.
Awesome.
if I can add, we have some offsets that we're gonna have also, which is. That this person doesn't have a mower, we don't own anything, we would
Yeah.
have to buy a mower, a couple of mowers, different types of
Yeah.
mowers. Some other things like that, it's gonna trailer to haul it, and so we need to, we're considering it's just a full, it's, we can't just knock off.
Yeah.
The guy that's, the contract stuff, but we're gonna have to invest in this. at
So
some
that would
point,
be in,
And then right.
that would be in capital
Yeah,
equipment purchase, not in wages.
yes,
Yeah.
yeah, but I'm just saying overall, if we're looking at offsetting a person doing work.
Well,
Next year for the summer stuff, we do have to somewhere also consider.
yeah, one of the concerns you might, I think you guys should. Plan some time to spend together about that. It is, soon after the first of the year, is think about what exactly do you want that role to perform?
Yeah,
And if it's more or less of a contract manager, facilitator, working with the staff you have, working with the contractors you have. That's kind of X, or is it different where they're also doing that work and then it's gonna require you to buy some equipment? So I think those are the push and pulls you guys will have to talk
Yeah.
about.
and then is there a cost amortization of the equipment? You're not just gonna jump out and,
No.
so it wouldn't be, so we're gonna have kind of a big downstroke first year. And then savings later. But maybe not so much savings first year.
Even if somebody gives you the equipment today, where would you put it? So it's a tough bit,
You're right. Okay. So then do we need anybody? If we can just keep doing what we're doing.
Yes,
Yeah.
I'm all for that. I'm all for that. Let's just keep doing what we're doing.
For another year.
Yes,
I mean, you can do, I mean, I don't know if you have 2 cents on it, is it one or the other? I mean, if you do have somebody that's capable, competent and effective, you can really. You have a lot of things that are going on in the city that you're just kind of muddling through.
There's a lot of stuff that's not getting done.
There's a lot of stuff that's not getting
That
done.
it doesn't get done, that's actually, if you had the person, we had the person, they would certainly be busy.
Dealing with, for example, I go back to the CSTS complaints and the maintenance, some of those things. If this person is capable enough, you might even be able to reduce your costs of your NSU person. You're never gonna be able to completely replace it because they need to have a wastewater license. But they're still able to
Yeah, there's vegetation.
look
removal,
at,
there's a
even
bunch of
you
stuff.
did a study to look at pump times. That cost you 5 or 6 grand. This person should be capable of doing that analysis and going and sticking their head in the hole versus paying the consultant to come and do it. So there's all these little things that maybe you'll break even just in that person to dwell on.
Right.
Doesn't mean you're gonna do things different, but maybe there's just a different way to do that, in a sense, so. It's a bigger conversation, but I think if you leave your numbers, give it a 20% cut, you'll probably give yourself the most flexibility.
Mhm.
Agreed.
We're not approving the head tonight. We're just budgeting some
No,
dollars.
right,
So,
Right.
yeah. Tell me when you're ready.
I'm ready. I was just gonna touch on a few of the maintenance things, but otherwise,
No, do it.
okay, there for rental, there was 42,000 budgeted for 2024. I couldn't figure out what that was for.
Let's zero that out.
Okay,
I think it was for building for storing stuff.
okay,
I don't know.
It's the only
Cause
thing
that was back
it's the
to
only
our
thing
thing.
that I think we were talking about renting was space.
I think
What
so.
do we, so there should be something there then, because what are we paying to store that? What do we pay for the spot in the building?
That's big money. $100 a month.
So
So change it to 1,200.
1,200,
okay.
Yeah.
would that price go up if we had a trailer?
In there?
Yeah.
We don't wanna keep it out there. It's good enough for now,
All right, I'll update that. And then there was 132,000 for plowing the roads and 12,000 for blading roads. The blade roads, we had a budget, there's not been any expenses coded there. Is that something that's contracted, or do you know what that is?
Well,
That's the
that's,
gravel roads.
but gravel
My
road.
guess is
summer. It's not getting landed there then.
Okay,
you've
so
got
it
in
could
the right
just be-
spot.
Yeah, you've got the
Well-
employee, then you have cost of the grader.
Is that, something you contract? Do you know the vendor for that?
No, we.
Leroy,
our part-time
don't you-
Employee.
Don't you? travel
Oh,
that? Do you
okay,
do that?
so that's probably
Oh.
showing in
We
wages,
hire, part-time driver for the,
Oh.
Right.
Yeah, we
for the
don't,
grader.
so that wouldn't be a.
The only thing that
maintenance
there, the other
expense
expense would be fuel and,
Maintenance
repairs.
and repairs on the
Yeah.
grader.
And they've
So-
been sending the bills.
I wonder where they've been.
Where's that
those to.
landing is the question.
Right.
Is that
You have
under
maintenance up on
under
top, but that's only
maintenance?
$3,000.
repair maintenance?
So the operator would be up in those wages,
It's,
so.
the
but for-
operator, I think, is in the,
Is an employee.
is in
Mhm.
the
Personnel.
43100
Yep.
dash 100. That would be the operator wages right there.
Mhm.
$441.
No, the 98, it's headed towards 9824, but right now currently 7,038.
Oh,
Not the first one,
gotcha.
the 431 account.
Okay, so that 12,000, should we remove that budgeted expense? I don't see anything that's been coded there. I could go through and look at certain
The only thing
vendors
that
or
I would
payments. to
say,
see.
Tessa, the only thing I would say was we need to make sure that we are where we cover the expense of fuel and
Mhm.
maintenance on the grader.
Would that be the 8,000 for?
We had a few repairs on that.
Ain't
Kind of.
Repairs and maintenance, 400?
That was from 23 though,
Yeah.
not from 24, so we don't have any expense there, but we've
Maybe
had
they
some
have,
blade, we already put cutting edges on, fuel,
we
tires.
should have about 5,000 cutting edges so far. For this year.
So
the,
we should probably have like
Yeah.
12,000 budgeted for it at least,
Yeah,
for that and for miscellaneous repairs. I mean, and we could
I mean, I
spend a
think-
bunch of money on one service call.
yeah, I think you're basically moving that 12,000 that's in the blade roads to wherever the repair and maintenance of the grader should be.
Okay.
There you go.
Would it,
Because that's probably makes sense.
would the,
I
what
don't
about
see
the
it.
miscellaneous general?
That's what I was wondering if that, I was just gonna look that up and see,
Well, the
25,000 is kind of
Yeah.
large and just a miscellaneous expense.
Oh, I bet you're.
That's probably where it is.
43150, 430.
So then your 12 wouldn't be enough.
Just-
Well, then you remove the 12 and you just budget on
Correct.
based
Yeah.
upon actuals from that.
And that's, so we had
Because of
15
salary,
in that one.
fuel.
Well, the salary's up here,
Oh,
right? So we're just talking fuel and repairs.
Fuel, tires,
Yeah,
repairs.
So that miscellaneous expense was for a drain tile project for Mark's Bobcat.
Okay.
So there was 19.8.
Oh, that's the one up at Great Fox.
Yep.
So that could maybe get reclassified, but,
So to be fair, so we, once in a while, when the bills, you have your bills and investments presented. Donna is doing her best to code them in manual data, so when Abdo looks at the data, it might just be lost in the translation.
Sure.
okay. So as far as the maintenance, and that is likely in some of those other repair and maintenance accounts where Don is coding it. So with that, I'm guessing it's in some of those other budget line items. So I think it'd be safe to take that account out since nothing is getting
Nothing's been coded against
coded
it.
there. If
Yeah.
you're all comfortable with that.
One more, what account is that again?
That's for the,
It's called Blade Road.
Blade
Four,
Roads?
three, 1, 2, 5, 4, 4, 8. Highlighted there in yellow for 12,000.
Right.
and then right above that, the plow roads, that's sort of what we had touched on. We had 132,000 that was in the budget at this point, significantly higher, but there was lower amounts. So is that what you were thinking to reduce by about 20%? Or,
No, I mean, if we haven't figured out where we're spending the money on the greater fuel and maintenance and everything yet, then I think we better keep some thoughts out for, maybe the 132 is just fine.
Okay.
Plus, that's my thoughts, also, I don't know, kind of look at some of the forecasts for the winter and we could have some big snow events this year. According to the stuff I'm seeing.
Hang your dartboard on that one.
I know, but it's just like,
Anybody.
we've been lucky the last 3 years. I mean, there's been no snow.
2 years ago, we had 96 inches of snow.
Yeah.
Yeah.
That wasn't lucky.
But
The last 3 years, it's been, we've averaged 100,000. I can send you the claims by meeting. It's averaged 100,000 a year. I think it's too high.
Okay.
But that's my thought.
Maybe split the middle on it, just do 15, so at least it pads it a little bit from the highest.
and I will do some more research as well and double check on that fuel and maintenance to see if I can find
Where it's going.
where,
yeah, I know,
It's
I know
going,
we signed some checks for like $600-700 for hydraulic stuff for the thing. At some point, I remember.
my assumption is it's in
How
that.
much did we spend? And how much do we need to spend? Is there any maintenance that we have to do on this thing? It's a diesel.
Bill, you're comfortable with 115,000 then for plowing the roads?
I'd be comfortable with 100.
No,
No,
why cut it short? We're cutting in half, or taking half. off.
because
That's
this
ridiculous.
year we've spent 40,700. The average over the last 3 years before this year was 100. I just think, I mean, it's 15 grand. If you want to, yes, 115, that's fine. I have a general comment I have to make pretty soon though.
Mick?
All right. The current year projected expenses for public works is $457,000. Okay? To me, when you're budgeting, that's your starting point. You've spent that this year. Then you normalize for what things are gonna happen next year or that didn't happen this year. For us to go from 457 up to 784,000. That's like a 300 some $1,000 increase or almost 50%, almost 100% increase, right? That to me, that's not realistic to me. I know we're hiring up public works, so I can normalize for that, some of that. Okay. But I kind of gave you a reconciliation of the ins and outs from one year to the next, starting with $456,619 that we spent this year. And I included adding more for plowing. I included adding a public works department. I reduced current maintenance by 50%. I don't understand why that went up. I eliminated the rentals for 42. That's how I do a sanity check on the numbers. To go from 457 to 784, to me, that's not realistic. There's something not right with that. And I don't understand Shane's going from 95,000 bituminous patching to 130 amounts per city engineer. Do we know, did he give us something that tells us what's happening there?
Yes, I had received, some estimates from him that I can certainly include in the next packet.
Okay. I mean, that's 40,000.
And there is, you are right, there is a very significant increase when we look at the current year projected to the budget. A lot of it, about 219,000 is in that maintenance item, and that's where a lot of those were highlighted or questioned because they had been significantly under for 24, so I wasn't sure how we wanted to
So-
include those.
So after everything we've talked about, that 783 will come down now, correct?
Yeah, so we eliminated 42, I'm just adding 15.
Yeah, so if you take the 42, the 80 for
Did you
the
already
plowing, which is your 40,000 this year projected to 132,
Mhm.
plus your 110 for your public works, that's 232 of the 300,000 right there.
Okay, good.
Here's a question too,
Right.
on the bituminous though. We spent the last 2 years, we spent a lot of money on Casey and Country Court on those roads. How much more do we have to spend in Casey? Cause I think there's still some left there that we gotta do.
Casey Parkway.
And,
Probably another.
and do we have to start dropping some in like Creekwood and some of these other older places?
Creekwood, we rebuilt that.
That's good.
What was that, 6
I-
years ago,
I-
5, 6 years ago? We did Creekwood, we rebuilt that one.
How about some of the other roads?
Casey's will be 40 or probably 40,000,
Probably more.
50 maybe, 25 for each street. There's only
2 left. So,
So maybe but that number came from Shane, right?
yeah,
So what's he looking at?
well, what's left in Country Court?
Probably not a lot. I think we got most.
That's in pretty good shape.
Maybe he can just send us what he's using. That would be nice. But you said 232?
232.
Yeah, it's funny. I asked her to lower it by 200, so based on my reconciliation. So
And that was
I'm
me fast
comfortable.
math, that's
Yeah,
not,
no, that's good.
exact.
Well,
That would make sense.
My question is, do we actually need to spend that much, or budget that much now on bituminous, or we kind of?
Well, Jay, until you get understand what
Yeah.
is figured in that number, right? That's
Right.
why Tessa said that she'll send us
Yeah.
before the next one, the detail. of
Okay.
that.
Sorry, my computer, I would pull it up now, my computer
No,
was
that's fine.
asleep and then I lose my
That's fine.
connection, so.
One other thing is that, one of the things for
Yeah.
your public works,
Potentially.
the public works type person. If you can find the right person, they should be able to do an RFP for some basic seal coating, whatever you wanna call it, chip sealing, whatever these things. That you shouldn't have to pay an engineering rate for these things, you should be able to issue an RFP for ditch cleaning or deal with some of these things. You're paying a premium in every one of those
Correct,
things.
correct.
So it's. I think more
Yeah,
of the
we're
savings,
paying for it not to have a public works person.
you're
we're
paying
paying
your city engineer to do this work
Correct.
for you, granted. Even if it's break even, it might be a better service to your community, somebody who's knowledgeable about what's going on. I don't know, something else to think about with things.
Back up.
So make a note. Hopefully it's 200 to 232 when you redo those.
Well, but the plowing, I don't think,
You know.
that was taking the 40 number, so,
Oh,
right, 40
Well,
this
we're-
year, if you're
Leroy
spending,
wanted 115, so.
right, so,
so-
but I don't think it's realistic to say 40 is where we start for this year's budget.
Right.
No,
It's not.
So we should increase our 456,
Yes.
619 to more of,
Right,
put another 60 or 70 on that to get to
yeah,
525 or something.
Right,
I put
because that
59 I
plowing
added
projection
59.
was just taking over
Yeah.
9 months,
Right.
so you could
Yeah.
really almost double that
And
in a
That was
way
a great
too.
answer, I mean, we're not gonna
Yeah.
have that again, most likely.
I added 59 to that
Yeah,
40
okay.
number. So hopefully that'll happen. Can we do the same exercise for planning if we're done with public works? Because the
Yes.
planning department, we went through that. But projected this year, 314,000, budget 463, so that's going up 50%. And I'd like to know why. A lot of it's in the other professional services. A good piece of it. So we have projected for this year, 218,000, the blue number. And we're putting in 300. So why is it a nice round 300 number? Why wouldn't it be 218 or 218 plus 3% inflation
We
rate.
talked about it, but so for example, in 2023, it was at about 350. In 2022, you're at 195,000, so you're gonna get some ebb and flows. However, a lot of it does relate to, if I'm not mistaken, and some of it's billable back to developers, so.
In fact, a lot of it is. So
Yeah.
did you make sure that your building permit revenue equal and licenses equal your building permit expenses?
Issuance expense.
So on this one, it looked like during this year, the expenses for collaborative planning had decreased in the middle of the year.
That's our former planner. third
Okay,
party.
so that will not be,
Well, we have a different one.
We have a different
have-
one, so we
that's-
replaced one for the other.
Okay.
Right, but there's a lower cost to the current one.
okay,
But again, you still have to take out, to try to figure out how much work is, you know, since contracted, how much are they gonna have to do
Yeah,
over the
a
next
lot of
year?
it's billed back to developers.
A good piece of it
A
is
good
built,
piece of it is.
right? We
Yeah.
just need to make sure that we're,
So building and permit revenues at 430.
Well, yeah, I think we'd have to look at that, if those are included in permit revenues, because that would necessarily be a permit. As opposed to a plan review,
The building permit.
being different from a plan review from a planner standpoint, so if MSA is.
But we also have Matt's wages and salaries to cover
Yeah.
the building permit pieces.
Yeah, that's different. I was saying from a consultant standpoint, MSA is doing review like tonight for Yellowstone. However many hours she charged
Right,
us
Then it
that
goes
we're
to escrow.
responsible to pay for, we're billing back those folks, so that should show up on your revenue side somewhere. At least the margin.
I'd be happy with like 225. I mean, look at 2022, it was only 195. Look at, and I know that it went up in 2023. We're gonna do 218 this year. 300 just seems too high unless there's a reason for that, and that's what I'm struggling with. What's the reason for that? And if it's
just
building
kind of an
permits,
estimate based off of the 24 budget at this point. There were a lot of the revenues that were not recorded yet from all the credit card transactions as we were going through those bank reconciliations. Some of this is just updating and using our best guesses. So if that 300, that was just an estimate, like I said, based off of the 2024 budget, it looks like you are gonna be potentially less than that. It's hard to know unless you are aware of significant.
Well, like, so for
Permits or
example, if
anything
we're,
coming
we're
in.
at 218,635 this year. So far.
So far.
right.
Is the estimate. Those,
Wow, that
those,
would be
as end of
significant.
year estimate, those do not include any of the costs yet. For example, the plan reviews that you
That's
dealt
stuff
with
for
tonight.
plan reviews.
And so
On both developments.
on both, and now that's not gonna be $80,000, but I mean,
It's still,
could be 20 plus whatever still comes in the door.
Now,
You're
still
gonna-
goes-
Then these giggles about the studies you talked about tonight, and then there's the planning. I think the park study, although that's a different budget, but how those are all coded. I know you could probably, to Bill's point, you could probably knock it down a little bit.
it just doesn't make intuitive sense that planning costs are gonna go up 50% next year. Unless there's a valid reason for that. It just, the bottom line number,
But aren't you looking only back 1 year then? If you
I'm looking
look
at
back
projected at
2
20.
years, you're at anywhere from 200 to 350. This year's budget was 296. So it's really kind of flat from last year to this year. I mean, if you,
I think that's driven by permits.
submitted plan development. So next year, you'll have, you'll probably see another phase of Yellowstone, you'll probably see another phase of Ranch.
And.
So am I
and
missing?
Terra Farms.
Fair Farm.
Am I missing something here? Because if we've got offsetting revenue to expenses, does it matter what the expense is if the revenue is an increase as well?
If we're gonna decrease the expenses, we'd have to likely decrease those revenues as well.
Yeah, that's just my thought process on there. So
So licenses and permits are expected to go up $20,000. in the budget. 419 to 436. But planning costs are gonna go from 314 to 463. To me, that doesn't make sense.
And those budgets were maintained from twenty twenty-four at the point we started it. Just to kind of backtrack, when we came in September, it was just to get that levy, so we had to kind of put placeholders essentially in for some of these. And now we're going through and updating them a little more.
If the
It's likely
numbers-
those could go down, that building permit revenue. I don't know what your next year is looking like, your next few months, but we can certainly decrease that and in turn decrease the contracted services as well.
It's also an allocation of some of the costs from the finance director, county tax, some of those other things to the planning side. So all of the
Should-
accounting that comes through for all these, like, we're gonna,
That's up in wages and salaries though, according to.
but that's
the-
why that,
But
but
that's
a big
also
chunk
part of
the
that,
increase.
that offsets some of the revenue coming in, right? Because some of that's a bill back or.
Go ahead.
Yes, so yeah, so that,
But it's still trying to be accounted for on the cost side. So in 2024's budget was 67,000. The proposed here is 97,000, so it's a big chunk of the number. But we're trying to reallocate. Finance director, accounting tech, and some of the, and the planner's wage to that,
Why do we do that, by the way?
because of their work is associated with that.
I mean, I'm okay billing the developer, but why do we have to count, why make things difficult?
Have to.
I mean, there's no county rules that say we have to match, we have to. code
No, a
count.
lot of times wages get allocated, especially when you look at a city administrator position or a finance director position. Their work covers multiple areas, so sometimes allocations are set up to code some of their salary to those, so you can get a better idea of the cost of running those different functions, whether it's planning, you know,
Or
any
control.
enterprise funds, if you want to code some of the wages to those, because some of their time and effort are spent there. Basic
No, I
administration.
agree with
but-
coding it in cases where we bill it, but if we're not gonna use that information for anything,
Mhm.
which I don't think we do, do we?
Well,
We only
we're
get
waiting
them.
on
I
transparency
think
to
the only thing we could
CSDS.
do is justify additional. People, it's really, I think,
Yeah.
what I see.
I don't know, it
But
just makes it.
I agree, it's more, it seems more complicated.
Yeah.
Right,
Well,
then
the only,
it's-
I mean, the only thing I would look at is if we're billing CSTS, or billing some people like that, you know, then. You throw a number at them, you really wanna be able to show it, be transparent about it. So I, you know, I
All the
think.
costs.
Yeah, all the costs, and it should be, we should be breaking it down for the people that are paying those bills.
And at this time, it's just estimate percentages, I believe is how it has been done. It's not based off of actual time cards and
Right.
hours spent, so.
So. I could go through all of these, no, I mean, the wages and salaries, the first line item, going from 77,000 projected this year to 97,000, so that's a. You know, that's a 30% increase.
So
To me,
They
that
were
doesn't make
allocated
sense.
Previously to include finance director or any of those other positions, so that's
It's-
kind of.
Is that the
it's
only
the
reason why?
accounting technician was not included in prior years, and so. When I was looking at her wages, I used the same allocations that were used for the finance director. So that's where some of those are added.
So we have a savings.
So we
What's
pay
that?
her 20 grand for planning, she does the accounting tech. is
Well, I
just-
mean, if you take it out of this, then you gotta put it back in somewhere else, so it's really to Tessa's point,
So not-
where are they doing their work? And you can track it a little better in some sense.
All right,
If you put it,
She's probably processing the escrows, you know, everything,
All right.
probably more stuff related to building permits than. Other finances.
Okay.
Between that and CSTS billing, I'm sure that's probably most of it all, now it's everything, but.
Yeah.
If you really look at what we hired her for, it was for that type of stuff.
all right, so accounting tech is the reason why that line item is going up 20 grand. Right? That's what I'm hearing.
15% to the finance director and accounting tech's wages,
Yes.
so. And
But that is-
100%.
that
And
just says
that
included.
the accounting tech was not included in 23 numbers, in 22 numbers, that was a new one. And again, I just used,
Mhm.
Was the finance
Yeah.
director's 15% included in the 77,000?
well, there was a large portion of this year, you haven't had a finance director,
Okay, so
so.
that's.
But in 2023, yes, there was 15%.
So it's the finance director, we don't have, and it's the county tech we will have for a
Mhm.
full year. All right, that makes sense.
Yeah, so
We
some
don't-
of those offset the difference, but,
Okay, so that explains that. So go down to employer paid health,
okay,
projected year in 0. And we're gonna spend 38,000 and the comment is value plan health insurance premiums for planner and 15% of.
finance
What's-
director.
Yeah, what is that? We already pay health insurance to our existing employees.
So
Well-
because the finance director, it's not known if they're gonna take the city's insurance, how long they're gonna be here, what plan they're on. As well as the planner, we had that one budgeted for health insurance also for next year.
So
So
the-
those are kind of tricky because until you have somebody in and they make an election, you don't know if they're going.
So you're saying that the
elect.
former finance director did not take our city insurance?
She did, it was not. The way it was coded and paid was not allocated in accordance with their wages. So this time we allocated all of the taxes associated with them, para, insurance,
So
everything.
50% of the wages are allocated, 50% of the para, 15% of
Mhm.
the FICA, 15% of the health insurance.
Yep.
Dental, life,
All of that, yep.
benefits, fully loaded benefits.
So
yeah.
then did you take it out from where it was coded in 2024? Because we're not gonna have that. If it wasn't coded in this, there's 0 costs in this for 2024. So you're adding it because we weren't coding it right in 2024, so we're adding it to 2025. Did you pull it out of 2024, wherever it was coded?
Well, I didn't really touch 2024. I could look into that cost savings on where it was budgeted if we wanna look at,
Not
you know,
where,
those variances, but it, for the 2025 on what you possibly might be spending, that's where these were coming
I'm
from.
fine with the 37, as long as you pulled out whatever we paid her for employee benefits, wherever else it was coded this year, because she did work here for 5 months. Did we
Oh, so you're
back that
saying,
out?
so wherever the
There
total
is,
lump sum
yeah.
was coded in 24.
Yes.
Needs to come out for 20.
So as long as it's not budgeted there again.
Don't wanna double budget.
25, that's
Yeah.
what, just not double budgeted, that's right,
The
okay.
prior page has it right at the top. So it's 60 down to 23.
Yep.
Looks like to me. If I'm looking at.
Yeah, so
Employee paid health.
415, 10, 131.
Yeah, if you go back the page prior, it looks like that's finance director and accounting tech.
Yeah, budgeted 70% of the finance director coverage on the value plan.
Thank you. All right, that's good.
So we're good.
So what did we decide then on the other professional services? We're all comfortable having it grow that much? Because unless there's a reason, I'd say keep it flat plus inflation. If you're comfortable with your projected year in 2024 number.
Well, what have we authorized? We've also authorized things for next year, right?
Well, we're just talking about professional services for planner,
Okay.
right? So that, so under planning,
And that generally is gonna get billed out.
correct, most of that is passed through and really depends on what we believe is the workload for development review.
Bill, are you saying why don't we have $1,500 in there? For professional services?
Why we don't have what?
Cause we're under planning, right, still?
Yes.
Yep.
Under professional services, 419-10300.
No, I'm on 310, the bottom,
Yeah.
310.
Yeah.
Other
Oh, I'm
professional-
sorry,
profession-
I'm
the
sorry, I
very-
was on the wrong line, I'm like, what are we talking about?
If
Okay,
I look at
We're close.
2022, 2023 and projected 2024, the average is 254. I would prefer having that 300 to be 250. For the budget, that's a 3-year average.
in my opinion, again, if we decrease that, then we gotta decrease our revenue. Cause that's mostly pass through, right?
Mhm.
Well, you don't necessarily have to decrease your revenue. You would just see a surplus at the end of the 2020. Saying that right?
No, cause
No.
But in
the
pass-through stuff,
your
you tend to
expense
assume
is tied to your revenue, so if the expense were to decrease, it's because you brought in less revenue.
Right. So I agree with Abe on that.
So if you tell me that, yeah, I agree too. So if you tell me, Tessa, that the revenue for what we pass through is going up the same amount, then it doesn't matter. Is it? It's going from 419, if I'm looking at licenses and permits.
Mhm.
419,339 is what we expect this year,
436.
Oh, I see what you did.
and it's going only up 15,006, I'm sorry,
But
17.
is that because we had?
But if the
No.
pass-throughs,
So I'll take an average for that building permit revenue over the last 3 years and decrease the 2025 budget to agree to that. Consistent with that contract service expense.
I don't know if that is high relatable because the other professional services, it's not, the planning is not related to building permits necessarily. I think if you just, again, a lot of it's a little bit of a guess because you don't know what tasks your planner is gonna be asked to review. If you knocked it down to 250, probably it's fine, but I'm trying to tie it back to permit revenue might be a challenge because I don't know if they're the same.
right,
And I just did a quick calculation, and when we look at 22, 23, and projected
You're
24, you're at 437,000. Because 2022 is really high in building permit revenue,
Yeah,
so there's
right.
probably some of that that's also in that surcharge, but, is there a portion the city probably retains as well?
Well, yeah, the planning review of something doesn't necessarily always result in the same year permit revenue.
Sometimes, yeah, because sometimes it is.
So like the Yellowstone stuff with the ranch, they're gonna be permitted next year, or maybe the year after when they find.
But generally, we start the escrow when they start their project.
to
Correct.
take it out, yeah.
Right.
Yeah.
Right,
So I guess my point is, it isn't always necessarily tied well to
the revenue.
the building permit. revenue.
Well,
Right.
what in the professional services, what are examples of some of the things that would not necessarily be charged back?
Probably a few things.
There's some legal, obviously.
Well, we charge
Yeah,
those back.
well, not everything though. I mean, is there something we're looking for?
Like if you ask for a special study next year for something.
the $4,800.
There you go.
That ain't gonna happen, but
Well, yeah, I mean, or something else, but, so if you went to 250, I mean, it's not an unreasonable thing, it's.
I'm okay with 300 if someone can prove to me that's the right number. If it's just an estimate, it doesn't make intuitive sense to me with the building revenue, building permit revenue going flat.
Is it a question of, you're trying to be transparent of what your expenses are and. Yeah, those always would be perfectly match your revenues, never.
Well, then I guess we also look at what studies do we need? You know, is everything that we're gonna be paying for engineering right now covered? In this budget? For the sewer studies, et cetera, planning, there's gonna be planning as well. To go along with that, is that somehow covered somewhere in here? Now,
I think we budgeted. We're the fourth of the sewer stuff.
This year.
right, but are there other studies that we're gonna contemplate or need in this next year?
Do you folks want to look at, for example, looking at some of your setback. Or lot size requirements, I don't know, or just, building design guidelines.
Yeah, what about
Especially there you
ordinances?
wanna look at,
What about, building ordinances and some other things that are gonna be coming in? Are we gonna be spending money on that? Codifying those? I mean, that's that, would that actually, I'm just asking, does that come out of that portion there?
You're an
Or
exception.
is it somewhere else?
Cause Donna will be in her office saying, Eric, where do I code this?
Yeah, I mean, we've all agreed that that we need to do some work on our ordinances and, and where's that being budgeted? That's my question.
This would be the spot.
Yeah, that would be the spot, right?
We have a capital, would that go under capital planning? 401 planning reserve? That type of
I
project,
don't know, I'm asking the question, so I mean, that's good. Maybe that is,
because that's not an operating expense.
well, it's not really an operating thing, is it? This would be.
General fund revenue, you can apply it pretty much where you want.
I just saw planning reserve with allocated levy and expenditures for projects.
Yes, we moved some of those to that 401 to plan ahead.
If
for
you
that,
guys
but-
want 300, fine, I don't get the number.
Well, no,
The
I
number
don't
makes no sense.
necessarily, I'm not looking to put money there, I just wanna make sure that we've got money, we're able to spend the money to do. Those things, cause I think those things, they're just as important as some of this other stuff.
Yeah.
You know, and if we don't budget it, or we take it out now, and we can't put it back in 6 months from now.
Well, we leave it at 300 and then the asterisk is if we go through all the changes that we have and make sure we adjust
All right.
next time.
Okay,
Just maybe
All right.
better. Okay,
The one other question I think I had on the general fund is in Public Works, again, for that culvert maintenance, there was 35,000 that was budgeted for 2024, there hasn't really been anything. Do you know of,
well, didn't we?
and that could have been that drain tile that was in the miscellaneous.
No,
but-
there's more.
No,
Right
because
there.
that wasn't
Not there.
budgeted. What we're gonna do,
Did we do jetting or something like that? Is that maintenance?
that would be
Start-
culvert maintenance, did we do any?
Yeah, we did.
Casey's edition.
Yeah,
Right.
I'd say it was over 7,000.
Didn't we do one on
there?
I'll get that
Close.
moved there. Do you
Oh.
recall who did that?
Goliath?
Goliath, yeah.
Goliath? Okay. Sometimes it's easier to look by the vendor and then see if it
Right.
was coded. So
Cool.
I will get that moved there, but for 25, what are your thoughts?
We probably should be doing some.
There is,
Or one in Country Court.
Yeah, there's one there that's plugged. But are there other, I mean, are there other ones?
what's blood?
There's the one that goes into the.
The drain,
The one
the
up there.
sump on top of the hill that doesn't have an open.
Cleaned it out all the time and it keeps plugging us, they gave it. Let it run down the street. Well. There's one on, can't think of the street now, Lynn. Going in, there's that 6-foot culvert needs to be repaired, the end blew off about 3-4 years ago.
What was the one down in Country Court, by the retreat center? Franciscan.
It's up by the top of it, it's on White,
Is there a
White
big
Drive.
culvert
on White-
that's gotta be
White Drive.
cleaned out there
That's
too?
White Drive.
No, there's, no, no,
Or
okay, so
Seward.
there's White
Oh,
Drive,
yeah.
and then there's
Suan.
that Suan, and basically the tree
outlet.
farm,
Yeah,
the tree farm keeps filling it. He's just got so much sand coming off of this driveway. That it's essentially silting out the pond.
Lever, how much you want for culvert maintenance?
What do we got?
Right now it's at 35. That's what we budgeted this year. We've spent,
That's not right.
$2,000.
No way that's
There's no
2,000
way.
spent.
with that, I bet you we spent 10 or 15.
I just
At
looked
least.
up Goliath. It does look like it was just that 1480.
Really?
Unless, this is a backup I had from Donna's, unless that was just spent like in the last.
That was longer ago.
Summer.
Yeah. We should have had that bill by now.
There was more in 2023. There was about 12,000,
Yeah.
but otherwise,
Well, what about the 170th Street stuff? Where's that?
That's a whole separate project.
Okay, that is a special project.
Yeah, that's a capital project.
yeah,
And that one's budgeted this year.
So we're at
maybe they haven't billed yet otherwise.
30,
God,
How about that cow thing?
20.
what's that?
That
Oh, the
cow-
other culvert, 195th?
Yeah.
That's done.
Yeah.
Yeah,
25 and
That's our capital.
25 would be a good.
Was that also in capital?
What's that?
25 would be a good number.
25,000
25,000?
for culvert maintenance?
Okay.
We're getting a lot of the odds and ends cleaned up in the last couple of years, so.
We can touch on the fund balance and that. Just a couple things for the other governmental funds that I was gonna make note of. Fund 201, as you know, there was a transfer out to close that fund, so all of the remaining balance in 2024 was transferred to the general fund. The park fund. There was, we'll touch on the transfers when we look at the,
Page 15.
these might be easier to kind of look at when we go through the budgeted projects. I'll touch on that in 1 second. Just to circle back then for the general fund. At the end of 2023, the general fund had an ending fund balance of 2,525,000 roughly, just under. Part of that was classified as non-spendable, part was, sorry, should add page numbers.
You're back.
Yeah, I'm in the memo part. Part was that public safety aid, and then the rest was unassigned. So as I mentioned, there was a resolution passed in May of 24 to transfer in a little over 1.3 million from that road and bridge project. And then there was also that resolution to transfer 614,000 from the general fund to that capital improvement fund. So we had gone through and looked at, like I mentioned, the projects that were levied for in 2024 that we didn't spend, because that was the concern.
Yep, and speaking of that. You can go back and look at our budget presentations from last year. We actually budgeted to use reserves to fund those things.
Okay.
So did you account for that? Because we didn't really levy for them. We planned to use a reserve for them, and I think it was 131,000, or it was something, some number. So I want to make sure that you're thinking about that when you're pulling that 179 out of the general fund, when we didn't even put it in. If that makes any sense.
Yes,
Now, we still may want to do all that and pull it out of the general
Mhm.
fund, but we didn't levy for it. Okay, it
Yes.
just made our reserve this year, and this year higher because we didn't use anything. If that,
Mhm.
does that make sense to you?
Yep.
Okay.
So for 2024, it's expected that the general fund may increase approximately 911,000. We identified about 179,915 that we're looking to take out of that general fund. That was potential savings or those reserves that we're gonna fund some of these projects and move this into a budgeted project fund where that fund can be then used to start paying for these costs out of. And the thought was to have various kind of set aside or reserves accounts in there because some of these may be a few years. You either want to potentially start saving or using some of these reserve balances and designate them for those purposes so that it's not all in one pool and gets lost. So that way you can make sure that as you're going, you're budgeting and levying for what you need, but you're also starting to fund for some of the projects that you may want, whether that's equipment, building, studies, whatever that may be. So these amounts were what we identified from going through those 2024 budgets.
The numbers are right. It's just that we didn't levy for
Yep.
some of it.
And then lastly, we took a look at your 2024 estimated fund balances, comparing this to what the Office of the State Auditor recommends for a city to have in reserves, as well as the city's policy. So the Office of the State Auditor recommends cities maintain between 35 and 50% at least of the following year's expenditures. And the city's policy is not less than 33% up to 66%. So I did calculate what that fund balance would be based off of those percentages, just for your knowledge. As well as then that excess fund balance column is, that heading may be a little misleading, but it's essentially saying this is what you're projecting, this is what it would be, and the difference. Not that you need to reduce it to that, but that way you can see what that is.
So if I remember right, last time, there was a lot of talk about AAA rating or something of that nature and 66% or we were up at 90 and that's where we got to, let's drop it by 130 or whatever. Is that still a true statement as the 66% is where that rating starts to shift if we go below that?
I can't believe it is, to answer your question, I looked at Prior Lake, their fund balance reserve is 40 to 50, that's their target. Savage is 30 to 50, so for us to be 66%, I
What,
don't
what
think,
rating are they at?
I didn't check their ratings, because I didn't know he was gonna ask
AAA.
that question. But
Savage, I think it's AA.
Because in all, since we've gone to that AAA rating
AA.
or AA, we've been
AA plus.
getting great interest rates. You know,
So we're AA plus and well over 105. Prior Lakes AAA and they're at 50.
I didn't
So
look at
there's
this
something-
rating. I didn't look at the ratings.
What's the difference then?
I don't
Could
know.
I offer, so.
Yeah.
Bond ratings, in a lot of ways, are not much more than
Marketing,
card game. They're nice, but as we all know, even people who don't have a lot of money can get platinum credit cards. So they do a lot of metrics about your tax base,
Yeah.
your tax rates, your fund balances, your housing market, your job market, and there's all. It all kind of
Your
goes,
tax
it all
rates.
goes
I mean,
into
it's
that.
all, it's what's your ability to repay the
I
bond.
would argue it probably not directly related.
Okay,
I mean,
because that's what it was.
Yeah.
At least that's what I picked up last year was all based off of your reserve.
It's part of it, but it's not.
Okay, and I probably misunderstood.
It was implied.
Okay.
It's nice to, say you're a double, I don't know, I can't read it, double
Double
A
A
two
plus.
or double A, whatever.
AA
You know, if you're a double A one or, you're talking fractional portions of interest sometimes. So if you can avoid issuing debt in the first place,
Right.
by holding on to a little bit more cash. So you can cash flow some of these things, you'll leave money ahead. Doesn't mean you want to go overboard with that.
No.
But that's the push and pull.
Mhm.
I think we were talking about so right now, the city we're finishing up a road project this year. And it was about $1 million, pick a number, we sent the assessment rolls out. And we'll be getting payments for about for roughly half. And starting in November, the rest go out to the assessment roll, but in the meantime, the city has to pay the contractor $1 million. So. Where are we getting the dollars? So if we can avoid issuing that
Bonds.
debt. And we can cash flow it a little better, it's not even just the interest rates, the issuance,
Cost.
issuance
cost.
costs alone are 30 grand, pick a number.
Yeah.
So it. Very quickly. It's real time stuff. So. Anyway, more do you wanna know?
No,
Now we can maybe go through some of the projects that could impact capital levy and then do a follow-up on how we'd like to look at this. So I apologize, these are small. Now, before I dig in, like I mentioned, I worked with Eric on this and the goal was to have a tool for the city council to be able to start putting some of these funds in these reserve accounts and use that as part of your budget so that the levy isn't possibly tied specifically to a project in 1 year and you have those big fluctuations or things can change. All of a sudden a project moves up or gets pushed back. It's difficult with budgeting, planning for the coming year when we're still trying to get an idea of what we're doing this year, finalizing last year. So that was the purpose of this, to kind of have a better idea of where that capital comes from and get the council's feedback as to projects that you would like to see that didn't happen in 2024, what we want to do with those, looking at 2025 and forward. So in doing this, we kind of went through and looked at your capital improvement plan from last year and grouped these into similar functions, I guess. The first one is City Hall buildings and maintenance reserves. So as mentioned, there was 614,000 that was moved out of the general fund and into the Fund 401. There's been estimated about 53,000. There's, I believe, 35,000 to date, and then potentially a little more spent. It was budgeted for about 800,000 in 2024 and using about 820,000 from reserves. Is the council anticipating additional design costs being incurred in 2025? We don't have anything planned for that at this point.
We still have some billing. I mean, they've done, I don't think we've been billed from the architects yet
Okay.
for last year's.
The
Or for
tariff
the
on
last. Tara is the,
contract.
is the
Construction manager.
construction manager, so you have the architects, yeah.
We did a BKV of some sort. I don't remember what it was though.
So I thought you guys were talking about it, because you
Was it
weren't sure of the
BKV we
price.
held back, or was it?
I thought it was BKV that she held back
Yeah.
the price, held back the
That's
claim
what you
on.
held the money back on.
Oh, Tara.
Was it her?
Yeah,
Yeah.
I don't think
Okay.
we've seen anything from BKV yet.
Really?
Can you look at BKV?
That's interesting.
Yeah,
You think they'd want to get paid by now?
well, part of it
Yeah.
is just tied up with
Hmm.
the way the process would go, you know,
Yeah.
there's the pre-construction, which they're gonna absorb some of that. But if this thing slides and we do nothing with it, then we're gonna owe them something.
There was 6,400 paid March 6th, about 2,700 paid March 28th, and $843 May 2nd.
Not sounding like, I mean, I think there's.
Holy cow, so they haven't built since May.
Right,
Everybody's watching, you'll be getting an influx of.
I think they're waiting for us to get them to the next step,
Yeah.
you know, which
I think
is,
so too.
but, you know, I think
We haven't really met with them since
no, we haven't.
Yeah.
May. Maybe June.
And so then the other thing with that is, you know, are we putting the brakes on this a little bit and letting this committee do its thing? And are we actually gonna need to spend anything next year in 2025, or are we kind of pushing this thing beyond that?
Yeah,
I
one
think
of
we're
the
still
things-
looking for a need, right?
One of the things we need to consider is just the land, right? I think
Yeah.
That if something comes available, yeah.
Yeah.
I mean, there is,
But if it's in the.
Mhm.
In the fund reserve,
So for,
it'd be hard to budget for what you're gonna spend on it, you didn't mean, you know. Sorry, Tessa,
no, go ahead.
no, go ahead.
In this one, all I have included for 2025 is air conditioning for City Hall and the City Hall parking lot. Those two total 20,000. They were part of 2024's plan that hadn't been done, so you'll see that's offset by that transfer in.
In the AC.
Yeah, we didn't, so remember that was the deal with, remember it had failed last year. And when the guy came out and fixed it, he said, you better start planning on a new one.
Oh.
So do you anticipate both of those possibly, would you like to include those in the 2025 budget?
If we're not working on, if we're not,
especially if we're not working on.
Ah.
doing something.
right,
Because we're gonna redo the resurface parking.
yeah,
And then, the government center project we have showing in 2027 for now.
That's probably okay to be.
it's not gonna hurt this
It's not gonna hurt.
next levy.
As long as the residents know we're not doing it. We haven't pulled the trigger on it.
We haven't, well, we're not pulling the trigger on it, but we're not necessarily. We're not pulling the trigger on this other thing either. I think we go through a process and figure out what we actually need.
One of the challenges that I've seen cities have is they and I'm probably guilty of it too, and we made some changes where I was. So you develop your CIPs, your 5-year capital improvements, so it's all these lists of wonderful projects, aren't they all cool, and they all could be great. But none of them have the effect of funding. Till they're put into a matrix like this where you're dedicating funds, they're just kind of wish lists, for lack of a better word. So what I think what we're trying to say to you folks is, and they clearly understand is, hey, you need a city hall parking lot, then the AC's gotta get fixed. So we're putting that into this fund, and it's funded. It's not funded in your general, it's funded in this
This
account.
project.
So it's in the CIP along with 15 other things, but until it's something is here, there's no dollars. That makes sense. Okay.
So currently of the capital levy, the 475,000 that we set as the preliminary in September, we have 25,000 going into this account. As currently, we only have those 2 projects that are carryover from 2024 that we have that transfer in from, so we don't have a project associated with that, but it's just if the city wishes to build up this fund for a potential government center, and I should note, these are all just placeholders that I put in to start with, just to begin those conversations. So, we can go on to the equipment one for that 25,000 with the levy. Do you want to make decisions as we go through each of them, or do you want to go through each of these and then go back and decide how you'd like to allocate or
I
what
mean,
you'd like
this
to
one's
put
a
in?
huge. Wow. So what happens if land becomes available? So what we're saying is we got
600,000.
600,000 to
Right.
buy land.
And, I mean, the price that I got for those 2 lots
Down payment.
was 2.3 million.
The ones in,
Yeah,
yeah, those are,
they're inflated.
well, it's inflated. There was a lot of land work already done to those.
Right.
And so.
I mean,
it's not,
there's also some benefits to that. You know, like that build into that, but it's still, you're looking at a little bit more. And if the deal, I mean, is the deal gonna sit there for 2 years or 3 years? Or,
right.
you know, is it something that we should think about if it's decided that that's probably the best place? Is that something we should be looking at, negotiating and doing, and then is your fund able to do it? And how much of that goes into finance?
Right, because then that changes it, you know, that might be your buy down the debt service part of it, but.
Right.
So what you're saying, you want to budget in the 600 just to pencil it in? I mean, it doesn't mean we're committing to it. It doesn't,
Well, I'm just, from an
If you're gonna
expense
build up a
perspective,
fund, we better start building it. You know,
yeah, I'm saying,
You know,
do we need to bump up the levy more? So just the 25, do we need to start building that up? Or are we gonna bond everything in 27 and hope that in 27 we build and find land at the same time? What's the possibility of that happening? Maybe. Seems unlikely to me.
right,
right. But
And another aspect of these conversations can also be looking at those reserves in the general fund if you want to do any additional transfers.
transfer some more in.
Mhm.
well, if you're keeping a reserve, you know, that's a good place to put it, right?
Well, the excess,
Yeah.
you know, if you look at the excess
Yeah.
or, you know, over that and say. Would you take some of that and transfer it into some of those funds so that, you know, you bring your fund balance back down to the reasonable amount?
I have a fundamental problem doing that, just because of the fact that we levied those dollars for other things. And now we're
Okay.
going to take that money and use it for land that a lot of residents
Don't
and building that don't want us to do that, so.
But what do we do in 3 years when Gallagher comes back and says they're done?
Yeah, I mean, right now, we bought some breathing room for
About
3
4
years.
3 or 4 years.
Yeah,
That's my biggest concern is. I'm in full agreement. I'd love to go as contract as long as we can, but at some point, we're gonna need to do something. Is it better to plan for it now? And put the money in there
Tiptoe
or
into
not?
it. Either you either tiptoe into it at some point, or you face the reality of potentially doing it all at once.
Well, I can tell you as liaison to the committee so far, I mean, what I did hear a little bit of is that there seems to be a consensus that, land is important. Cause it's not, we're not getting any new land. And I think the committee was looking at, that would be, land was a priority. In so far, as far as where they've gone, that is a priority. But we also need to figure out how much we need.
Mhm.
Or what we need specifically. But they were talking about that was probably an important thing. We haven't gotten that far into it, but that's still something I think,
So
2026, skipping 2025 and not even considering it is probably not a good idea.
So if everything goes the way it usually does in Crater River. In year 3. You're gonna be scrambling, looking for land. And we'll be in here. So just tell them to keep kicking the can down the road we have for the last 5 years. And nothing has changed. So.
I think taxpayers like that.
Well, until they get caught, I mean, we get caught with a mess, and then we have a mess, and it's gonna be costing us a lot more.
That's great that they like it, Bill, but they keep complaining that they want better services. They want better, they want better. They think they're living in Bloomington or Edina or something. So anyhow.
Well, the good news that you have here is that your current levies,
Yep.
throws 25 grand into the pot. You don't have to decide
Right.
anything else today.
Yep.
Right. For good or for bad.
So, do we still have the 614 set aside?
It's still in there.
Yes, so
Yes.
the
It's still in there.
614 went in there and then there were
So we're gonna
some
add
coming
25.
out, so
That's fine.
adding
Yeah.
25.
Which we're probably gonna
At least
spend.
Yes. So if
That-
we
that
add,
would be the two projects, the AC and the plug.
yes, so then you'd end 2025 with roughly 585,000. The next one is general government equipment. This one, again, these were kind of taken from the original 2024 plan. There was the financial software that was budgeted in 2024 that I put to 2025, and then there were some computer replacements for about 4,000. And then transfers in of 93,000, which were identified in the memo. That was the 74,000 for that equipment, and then 19,800. So for the financial software, is that something you'd like to leave budgeted, like
I
plan
think
for that in
that's-
25? Okay.
Yes.
And then for this, I did a levy of 7,500. Again, these amounts were just estimated. I kind of put in the expenses and those transfers in and just added an amount over the years to see how much would be needed to fund those if you chose to go with those projects. The financial software was 74,000 that first year, and then it looked like about 13,565, 14,000 for the following
Next
years.
couple of years.
So,
Yes, I remember those are data that I saw from.
Yeah,
Right, is that adding more modules to it? I mean,
Yeah.
otherwise it's not capital, it's just maintaining.
No, I
It's just
think,
annual lease.
I think the whole. I know the systems themselves to go from. It's not Banyan,
It's
but
Banyan,
there's
that's
other
what we're
ones
at
are,
now.
it's a big lift to go, the software itself and all the licensing. I think the out year costs might be able to be reduced a little bit based on the number of just like you saw with the
Other thing.
with the other stuff, but
citizen serve.
Yeah.
until you know it, you just don't know. And the interesting thing again is that if those numbers don't come to pass, then those dollars would at least stay in that account. And I'm sure with computer replacements and some other things, they're probably gonna come at you. You're gonna need those dollars one way or another.
and sometimes having these are a good way to make you look at all of your equipment and plan for that, for computers. Start setting up a schedule, so you don't have all of them that all of a sudden need
Do
to
it
be
one
replaced
time.
1 year, or you can just kind of look at that to identify what are potentially coming up, and also track when the last time you did was a little easier, watching some of those. For planning, on the next page, this one, we had, again, all of these were items from the 2024 one that pushed over. Starting on the 2028 comprehensive plan and ordinance codification, and then 100,000 in design, enterprise design. So this, reserve would have $40,000 transferred in from the general fund, as well as there was 100,000 that was part of the capital levy to be coded here.
Forget what the enterprise design was.
That was. I'm connected to my hotspot, and then every time my computer goes to sleep, it disconnects from our cloud.
I
network,
showed
so-
a strategic plan and, oh no. Get back. Bring this-
Was it the sewer plans?
I believe
Not the
so.
sewer plant, my guess would be meters and utility billing.
You know, I think, oh, yeah.
Last year's budget. yeah.
Last year.
Yes. So that was part of the, there was 100,000 that was included in the levy for 2024.
You know, we can probably give you the password to this.
Oh, yeah.
You know,
It's really secure.
Charge you a fee for.
When I do things remotely, I try to not go on, I could hear, it'd make more sense, but I try not to typically go on public Wi-Fi. I don't want to lose your stuff. Okay, so that was a design study. So I think it was water and wastewater
Oh,
design
sure.
studies.
Yeah,
Then-
that makes sense. So your comp plans require water, sewer. And stormwater design elements to be submitted with your comp plan studies. So maybe they're
Yeah.
from an enterprise fund standpoint. Okay.
So it looks like that was included in the levy, and then there's an asterisk that says these will transition to enterprise fund expenses when the utility is established. So is it to set up?
So was this a push forward from 24?
Mhm.
Okay, so 50 of that, yeah, the sewer study,
50's coming out
50's
already.
coming out of it already. Yeah,
Right.
because we approved that study.
Has that been done?
It's not
It's not
completed.
been
Okay, so I
but
didn't
we've
see the
been
cost for
approved,
that, but
yeah.
that's good to know. I'll update that.
Yep,
So 50,000 in 2020,
has been approved.
correct?
Yeah,
That
it'll be
sewer, was it
expensed in
50 for sewer and 50 for
I
water?
mean, it's probably some of it will be expensed this year, but probably,
No.
I mean, not the total amount, because I'm
Okay.
sure Shane will bill for as he does it.
Was
It'll
that
be a
50
similar water.
Okay.
50 for water?
So
and
It'll
then
be a
50 for sewer?
similar
So
water.
that's the
and
100.
Yep.
And storm too. There'll be an MS4 study and all this other.
So
compliance
so
stuff.
actually, this stuff is, we're good there, but we should probably think about what you're talking about.
Yeah, I think you're okay
Okay.
with what you have for the 100, if that's the goal between. Your water is probably less comprehensive than your sewers simply because you don't.
Oh, no,
have
we
those.
get costs on that, I think, if I recall, it was gonna be 50 for each one of those
Yeah,
studies.
we only approved the sewer one. at
We
this
only
point.
approved one so far, so. we
Right.
have-
Right,
So we
but
have-
the next one won't be due. I think the other reason you move forward the sanitary one was just because of your local.
Yeah, no, these were actually, no, these are different. These were actually this was the study to bring it across
We already paid for that one.
for the
That
water.
one's done. Yes, that was the project we already did, that he already did
That
the
he's
preliminary
in,
design.
yeah, he's in.
for underneath the road,
he's in
yeah.
the Met Council.
And then, the next one was to study the comprehensive sewer study. And then the final one was water along with that.
Right, and then we still have to do storm.
And some of that's headed
You'll
up
do
towards
some
the,
storm work too, so I think.
right,
If you have $100,000 number that's fund to take care of those 3 studies, probably pretty close.
Okay.
You're probably pretty close.
So again, on this one, I used 7,500 for what would be allocated. with the levy. Street improvements, this is a larger one. This you'll see has a beginning fund balance. What I did is I took the 2023 audited fund balance and split those between public works. It was between the street and then a portion to equipment based off of what the budget had identified. So there's 154,105 that was part of the 2024 levy that we will allocate to here. There's also about 92,000 in special assessment revenue to come in for 2024. You'll see for 25, I did increase that to about 115,000. That was an estimate with the new assessments that will be certified. I just allocated those over 5 years and also tried to look for any prepayments so that those are reduced off
I
of
think
this.
we usually get about 25% prepayment.
Mhm.
Yeah.
And I also went through and had looked at what assessments were prepaid in 2024 for your current ones, so that we weren't planning for that revenue coming in. There's 1,072,000 in projected 2024 expenses for the street project. That has not all been spent at this point. I just have it showing in 2024. I don't know. I'm guessing some of that will likely carry over with some of those checklist items, but we just have it all showing in here. And then County Road 27 payment for Scott County. So for 2025, we have 400,000 for the County Road 27 bypass lanes. That was budgeted in 2024. There was 172,973 for micro surface that had also been budgeted in 2024. That was pushed to 2025. And then you will see a transfer in of just under 300,000. So this on 204, that Turnley fund. It looks like that project was identified to be paid by those bypass fees.
The 400. Yeah.
So it's estimated that that fund will have just under 300,000. So that transfer in was to take what was in that fund and close it out and move it to here. There hasn't been a resolution for anything for that, but that's what I did here to show how that would impact. And then with that, I have 215,000 allocated for the levy for 2025. So with doing those, you'll see you still have an ending reserve balance of about 525,000. One thing to note, there was 1,072,500 that was budgeted in 2024 for bond proceeds. So I think the original intent with this project was to bond for it. That hasn't been done
Because
yet.
We were gonna bond for it if we did the CSTS project.
Okay,
That's why we did bond, because we didn't end up doing that project.
The
Stone Bridge.
Bridge.
Yep,
Right.
right. If we did that project, we were gonna bond for that project.
so I think, without that, it looks like still able to maintain that project without bonding. For 2025, well, we can kind of look at the other years as well. So the Scott County is 88,000 each year. There's micro surfacing of 626,000. This does not print very clear for 2026, and 110,000 for 27, and then 220,000 for 2029.
So
And
without changing it, goes in the hole in 27.
And then that also identifies the reconstruct or overlay projects in future years too. I did put in about 3 million for bonding in 2028, just as an estimate for now looking. But you would still not have sufficient funds for after that.
What is the 2 million and 2.3 million in 28, 29? What is that? Is that the sewer?
Yeah, that would be, well, it'd be, no, that would be, well, it could include that. But that would be the capital improvement for Country Court. budget number.
Do we want to push that out?
I don't think we know yet. So the sewer study's done, I don't
Right.
think we know. Cause that's a budget
Yeah.
number, that's not
So-
until the
No,
sewer
I know.
study's done, you
I
have
know.
no
We don't
idea.
have no idea.
For now, would you like to leave everything as shown, or would you like to move any?
Yeah, none of these numbers make. I have no clue where those numbers came from. I don't even know.
Those numbers,
Show that.
Mayor Council, those
They
numbers
came from
came from
Shane.
Shane.
Mhm.
Shane, so
Yep.
he must know what,
Yeah,
it'd be nice if he was here. Can I ask you a question on the bypass revenues? We're gonna get $290,000 from Scott County for something. And I forget what project it is, but it had to do with bypass. We just signed a resolution.
Yeah, over
So-
here in front of the ranch.
So is that, where's the revenue for that in our budget?
Maybe, is this something new?
She might not
Wasn't
know,
aware of
but that's
it.
something we might want to catch up on.
And would that go into this, special assessment, or just pick the code?
It can if you'd like it designated for that.
if that's where the expenses
Yeah.
come from.
Right.
Makes sense.
So it should be, yeah. it should go in there.
So I
I
can
think it
ask.
was not 290, but he has the resolution.
Okay.
If the
Thanks for
numbers in
that,
there.
Lime.
Yeah, so if you wanna send that to me, I'll get those updated.
So we don't have any reconstruction or reconstruct or overlay projects that Shane wants to do next year. Seems like every year we have some,
We're almost caught up though,
are
Bill.
we?
So hang on though.
That's a good, I don't.
The
that's-
only
that's
thing
good.
is though, is we push territories out
Yeah.
because of the Yellowstone project. So we'll probably have,
That'll come in next fall
well, whenever
or.
whenever we have the right whenever we have the right. You don't do one little piece at a time.
Right.
That was only a couple streets, wasn't it?
It was Dakota Avenue, right?
So we have 500,000 in the reserves.
Done. What do we have done? We just,
Dakota got
you know,
done
we
because they
just
came
pushed
in
it,
at
we just
200,
pushed
yeah.
it late. We did it, we still did it this year, we
Yeah.
just pushed it till later.
Yep.
So no, we probably don't have
Anything.
anything for next
Okay,
year.
good.
Okay. that's
Yeah,
fine.
other than the microsurfacing, right? So we
Yeah.
pushed 170th Street out because of the culvert replacement we're doing
Correct,
now. We didn't want to do that before that.
Yeah.
And then we'll have a big microsurface project the following year.
Okay.
Yeah, so really, when you get, then the next one will be, I don't know what the $300,000 project is in what year is that one? 27?
27. I don't think I have any.
We must be doing a reclaim and repay for somewhere.
Longview Lane.
Oh,
Longview Lane.
that's it. That's because we pushed that one off once
Yep.
already, right? Cause
Yep.
it's $337,000
Talk about right for that.
times 0.6. Yeah, it's about $20,000 per unit, cause there's only 4 houses on that road.
Yeah.
Yeah, the last time we pulled that one up, we're not ready for that.
Pretty much said left
That's
to
what
back to
happens.
gravel.
That was the road that Ted paved on a Saturday when nobody knew it was getting paved.
Public Works equipment. For the 2024 levy, there'd be 131,000 that was identified, so that would go into here to start it out. And then, there's been a truck that's been purchased and, I believe a plow blade. So there was about 73,000 in 2024, so we end the year with approximately 57,288. So in 2024, this was just taking some of those, or excuse me, in 2025, taking the 2024 items budgeted that didn't happen. That includes a tractor and mower for 20,000, 20,000 for tractor attachments, 10,000 for a trailer, and then there was a contingency for 10,000 each year. Are these items that you would like to leave included as kind of all circles back to, it all ties in, doesn't it?
Those items are kind of what we're talking
Right.
about for the public works thing,
Mhm.
you know, so if we're gonna do that, we should probably think about that. What I do see is that the plow trucks going out farther, you know, we could probably start looking at changing that because obviously we've got a contractor.
Yeah, I mean, you could push those, I mean, it's not gonna affect this year's levy
not.
any, but
It's not.
you're right,
Push those out.
Jay, that you probably take, if nothing else, maybe you take the first one and push it to the last one.
Right,
And then you just keep doing that until you figure out when you're actually gonna do it, cause it's not gonna affect the levy.
right.
So begin with 250,000 in this,
No.
2027, and then 330 and 330 after that.
Yeah,
Something
Okay.
like that, yeah.
just push those, yeah.
Yeah. Okay.
And you have your, I mean, we're looking at tractor, mower, tractor attachments, and we're looking at trailer. I mean, those things should probably stay.
Okay.
Well, those are the things where you start going, okay. Depending on the person you hire is when now are you gonna do
Right,
CSTS mowing in-house rather than
Correct.
contracting it out,
correct,
park mowing, that's where your value comes in
correct.
on your items there
Yeah.
on that employee. So until we decide when or what or how
Mhm.
on that,
So you don't wanna take it out,
right?
obviously.
Do you feel comfortable with those amounts? I just left the dollar amount the
I think
same,
we looked
or,
at- we discussed those pretty well.
Quoted some of that, right?
Yeah.
What were your quotes on some of those? Okay,
okay,
That's what I submitted there earlier,
Okay.
I believe, wasn't it?
That's where we got them.
Yeah.
perfect.
and
Then you
then.
got a contingency that pretty much takes up, that would cover any slack in that.
Mhm.
I think that's probably about right too.
Do you wanna slide those out next year or?
Well,
Keep them in for this
I
year?
think actually, if you're gonna talk about doing this stuff with Public Works employee next year, this coming year, then. We should have the ability to buy the equipment if we're gonna do something with it, otherwise. Push them both up,
That's fine, but
Together,
I'm just, where are we gonna
But all the,
put this stuff?
correct,
Not sitting in my house.
we have the ability to rent something else. And then should we have some rental?
I just think we shouldn't buy until we have a person. Based on,
Yeah.
I
Well,
learned.
No, but I mean,
Yeah,
put it in the
well,
budget, I don't, totally
leave it-
agree. Let's
leave
not
it in
buy
that.
it. Let's-
We're not approving to
let's not
buy it
take out of
today.
the-
We're-
I agree, I'm stating the obvious.
Yeah.
We don't have to
I
spend
like
it either.
driving.
Continue.
Yeah, I'll pick you up, it's pretty snappy.
then there's 60,000 for a skid steer in 2026.
That you can definitely.
That should
That
all
should
show.
go a couple of years.
Yeah,
What year would you like that pushed to?
28.
28?
Yep.
You can rent one if you need to, right?
Okay, so this had, I started with a levy allocated of 210,000. I did increase that about 20,000 each year. You're still looking at some deficits. We can rearrange that. Now when we shift some of those out, it might change some of those, but
Right.
I'll
Do we
get
need
that
to-
added.
Do we need to actually add that much? Here,
Well, if you're gonna keep those things in there
maybe we should take
for
it off.
future,
Yeah.
again, though, Jaden, that just, gets you to the point of
Right,
not whether you issue debt or not.
But no. Maybe we don't wanna live here.
Mhm. And then stormwater had 75,000 for stormwater pond cleaning, 8,000 for storm drain cleaning for Markley, and 8,000 for Lynn Drive. Those were budgeted in 24. I didn't see anything
No,
spent yet. Would you like to push those to 25? That's still
Yeah.
something you think you'll
we still
do?
need to do those.
Okay,
Well, the question is, should we be doing more? You've got, how many?
Those
how
are
many-
probably good ones to start with.
They're the
next
good ones
year,
to start with,
Because we know those are, but we're.
but we
yes,
have,
Jay,
we've got 74 ponds.
that you are correct that future out years need some planning.
Mhm.
Is there any, again, I'm not interested in having you folks go down a path of levying new taxes. However, sometimes stormwater management is often tied to a user fee in many communities. Now, it's a lot easier when you're issuing, where you have quarterly or monthly billings where you're sending out, there's a $3 stormwater fee or something like that, where you're taking that burden off your general property tax, you're putting it onto a user fee. and billable to those who are adding water to that system. In a sense, you guys ever talked about that or? is
No,
that
I
something
mean, you know, that's, the problem is that this is, the stormwater stuff is one of the things that's never been done.
Right.
Yes, it is.
Well, some, but
I mean, it's all burdened on your property tax. It's not tied to who's consuming the benefit of it in a sense. You know, so a lot of cities do have that tied as a utility, much like your other enterprise funds. Something to think about. Don't have to answer it today, but just another, think about diversifying your revenue is even if you got $3 a parcel. You know, that might take care of a few cleanings here and there. Everybody might benefit a little bit out of it. Something to thought.
Just one quick note, I had the Excel document pulled up and in the public works equipment, I shifted those couple items out. In leaving the 210,000 for 2025, I updated the following years to just keep it flat.
Mhm.
And that would cover expenses. 2029 would have a deficit of about 7,700, but then it would bump back up in 2030. So we could leave it for 2025 and then
Yeah.
as you're looking at it, maybe push those out so you can disregard those increases, because just pushing that big project allowed you to start building up some of
Yeah.
those, so. Okay, so,
Well, if we go back to that, I'm just questioning whether we want to start building that at all yet, until we get a little bit more down the road for plows.
mhm,
You know, that would also give us some money to put back down in stormwater. And should we start thinking about building that a little bit more? We're really not building it at all.
Yeah, we should start. Building that.
so would you like to reduce that equipment to just cover, the next couple of years
The next, I
Not
think so. I
for
mean,
plowing and move some of
Yeah.
that to stormwater?
Does that sound like a good idea?
Yeah, it is, because
Okay.
we could start going at,
We need to build a few.
there's a few ponds need
You're right.
attention and.
Yeah.
Yeah.
Okay,
Do a few every year.
what are your thoughts? What would you like?
Well, I mean, you know, the first, you're looking at the
Yeah.
plow, maybe, or not the plow, but the tractor mower, tractor attachments, trailer. That stuff is important, I think, probably in the next 1 or 2 years, for
Mhm.
sure. Skid steer, not so much, but probably could come in at some point. Then you start looking at, and I think the contingencies, we should just leave the contingencies as they are. But then we start looking at the plows themselves, yeah, we can push that out.
Yeah.
Yeah, I think, we can push it out at least 3 years, right, 4 years?
Yep, so I have those starting in 2027.
Maybe farther. I mean, right now, we don't have a need with the contract we just did, we don't have a need for a plow for 4 years.
Do you know why one was 250 and the other two were
Yeah, it
330?
depends, single axle or tandem.
Okay, so would you like me to push them all starting, in 28, 29, 30?
Let's do that.
Okay,
That
so
makes more sense.
would you do the 330 first and then 20, same order on diving or?
So just to go back to what we were talking about last time. If we do that in 28, we have,
True,
One
then there's
truck.
one, right?
we're
Yeah.
doing all these roads with.
Truck and a road grader, we're gonna have to update the road grader pretty soon too, so.
And I'm all for staying with contractors, but I think we might be shooting ourselves in the foot.
What, by planning that out, pushing it out too far?
Yeah,
So
without-
just make sure we have the money for it.
Keep it where it is
It's not
now,
necessarily by the
or
equipment.
not now, but keep it with the last revision where it keeps it flat without bumping the cost. So what, moved it out 1 year, right?
So I have 250,000 in 2027, 330,000 in 28, and 330,000 in 29. And then that's levying 210,000 each year.
So then in theory,
Cause you could get a truck and maybe upgrade the blade
right,
next year.
let's,
what if you take so you got the 210, 230, 250, 270, what if you just take the excess from the 210 So in 26, you take 20 down to the stormwater, and then 7, you put the 40.
Can you repeat that? I'm sorry.
It was very clear. What I
Can you repeat the?
I agree with the things.
You know what I'm saying?
I know what you're saying.
So 210, we were going up, 210 all the way, right?
Yep,
So, but in 26, we had 230,
yep.
so take the difference.
Oh,
to
to
20
move
down to
20,000 down to here.
to
Okay,
Stormwater, and then
That'll gradually go.
then 40,
got
then
it.
60, then 80.
Gotcha.
Yeah.
And then, just in case I missed it, were there other stormwater costs that you would like me to include for now, or this is just kind of building it up in
We don't.
planning
know.
for
We'd
that?
have to-
So leave it as it
We have to
is.
do an inventory first.
Got it. Okay. I just wanted to make sure I didn't miss something that you had identified.
think there's gonna be an MS4,
Yeah.
Yeah.
there's gonna be an MS4
Permit
permit renewal
renewal.
audit. I don't know what that could be.
Yeah.
Cost wise, what do we have to pay for that? And when,
Well,
is that a 2025 or farther out?
Well, I think your permit expires at the end of 2025, off the top of my head.
Okay.
And if you've gotta go back and redo your studies, let me ask Shane and find out what those things are, I mean, those are not, they're $10,000-$20,000 analysis. See these things.
So should we have money towards the end of 2025?
Yeah, if the question
Yeah.
is, is what could come at you, that you're gonna have an MS4 re-permitting or an MS4 audit response, you're gonna,
Catch up with Shane on that.
yeah, let me ask Shane, but it's not. Cities do struggle with MS4. They're bad,
Mhm.
you don't even have a true stormwater system, you have ponds, but you don't have a regional wide system.
Right.
So,
Kind of sort of ditched forward.
yeah. But a lot of those even pre-existed your corporation.
Well, yeah, that one just came up because
I know.
they want to abandon it.
Yeah.
That would be really good for all the people that live upstream.
Or else we're gonna take responsibility of it.
No, it'd be
Yeah,
up
I'll
to
ask
up to
you.
the
Oh.
owners along.
That's what they want to do.
Yeah.
Yeah.
But I think that's the order of magnitude.
If the beavers build a dam on your property across, it's your responsibility to remove it then.
The last two capital items I have are for the Parks Fund. There was 40,000 planned for playground equipment in 24. Do you want to include that for 25?
We did know some ideas. What it was gonna cost, right?
Well, at
This
least
is
on
the
park
park
funds, yeah, so page 20,
Yeah,
middle
sorry.
section there.
Is that something you still want to include for your 2025 budget? Do you want to push it out or
Well,
move it or? cancel
include it, we can,
Yeah. Let's keep it.
And then,
let the books land in the front seat if somebody wants. it. For the park equipment.
Right.
there was a Parks and Trail Master Plan for 20,000. Include that for 2025 as well.
We approved that and they should be working on that.
They're
Okay.
doing that, yeah.
Yeah.
So I haven't seen any costs yet, so I'll just leave
Probably not.
those in
It's
25 for now until they,
2024 cost is 12,000.
okay,
So it goes away for 2025.
so it'll only be 12,000?
I think so.
Okay, sounds good.
Is that between 24 or 25?
Well. I don't know when she'll bill it, but probably next year, but it's only a one-time expense.
Just update the 20 to 12,000. So I will go through and all my chicken scratches in my notes and I will update all of these for everything that we've gone through tonight. And get those to you. Then you'll have a better idea and being able to look at that budget and what you want to do with that. We can come back and discuss seeing these capital items, looking if you want to continue with the capital levies, and as far as the general fund levy, where you would like that to be and how you want to look at the fund balance, if that's something you want to look at reducing. And how you'd like to do that, if it's over a number of years or with the levy, kind of go through that conversation. Unless that's something you want to dive into tonight yet, but I'm guessing it's been a long enough night for you all.
I have one question, or one thing to add
Yes,
at the end of this thing.
Yeah.
It's just it's kind of just a question to the five here, before here. Do we have any interest in studying and having somebody take a look at our fire contract? Yeah, the cost that we're paying on. For that. Spring Lake Township does. Kind of looked at, kind of looking at trying to getting some sort of quote or cost to somebody to kind of look over the top of it and just kind of audit it a little bit and see what we're looking at. Because one of the things that we're doing is we started building all these extensive homes here in Credit River. The contract is pretty much set up by value. And we're gonna continue to take a bigger and bigger portion of that. So the question to you guys is, should we think about throwing some money out for a study or start to consider it, to look at it? You know, we also are gonna have a pretty big increase because they're buying another fire engine here in the next couple of years. So, you know, that's. You know,
Probably, Jay,
Your
think about
thoughts,
this
yeah.
is, and I've talked with Chief Steinhaus about this, is more of a comprehensive study of the fire department to see what is the future, what would be the future, if you look at
Right.
the build out of Credit River Spring Lake, how can
they
that
handle
model
Yeah.
continue to be
Right.
sufficient or
Right.
not, right? That's
Yeah.
probably more likely, you're gonna find that the cost structure is what it is,
Right.
and you're not gonna get a better cost structure anywhere else. I mean, you know,
Yeah.
they're not gonna just lower their price.
Yeah, and I'm not looking at starting a fire.
Right.
Because that's, you know, but there's other options, there's some other things, but that's prohibitive.
You don't want to?
No,
I do agree that the numbers are gonna get worse and worse as we continue.
so, I mean, you know, is that something
Bigger
we wanna,
houses 'cause the
do we wanna
way
get somebody else to
but-
put some eyes on it for us? And
If
look
I
at
was
it
in
a
fire,
little
like,
bit
I
or
would
not?
set it that way too.
So I think this is where maybe we ought to talk with Chief about, is that something that Prior Lake, because they've indicated that they'd be willing to participate in something like that in the past.
Okay, so is Spring Lake Township, so
Yeah.
maybe that's something, so if that's the case, is that something we try to put together for 2026?
It would probably be a 26 at this point,
And then
because
not
everybody's
go
gone through,
Right.
no, I don't think you could do it now, because there's not enough time to do it now.
Okay, well, that was the question of asking everybody. To see if that's something we wanted to throw some money in or start some kind of a study, but
We need
I
to
think
start
there's-
the conversation.
we do have to, I think we do have to start talking about it.
But I think that's the
Okay.
piece is understanding the sustainability of it.
Yeah,
Yep.
So I don't know how to do this, but is it possible as we continue down this process to say, here was our preliminary and then start to have some columns on there, so. we
I
can
was
see-
thinking of that. I'm gonna add in our, we have that budget. I'm gonna leave that and just add another one so you
I
can
think
see
that'd be great.
everything.
Yeah,
At
maybe
first I was
highlight
gonna
some
put in it,
differences.
but I want you to be able to see everything that changed. So
Yeah,
I'll do
that'd
an
be great.
original and revised for you.
And number all the pages.
Yeah, I put that, no, I did.
You're on here.
You know, I'm so used to looking at things as PDFs, so I can look
Yep.
at the numbers. And nope, I had that on there. All right, thank you all for your detail on this.
Adjourn, somebody.
Yeah, then make that motion.
I'll second.
Motion is second to adjourn, all in favor?
Aye.
Anybody opposed, same sign?
all right.
Well, if we continue at this pace, it's a much better budget season, you guys. say.
Amy, you get a chance to grab that mouse and,
That's great. Way better experience.